Hello, everyone. My guest today is Kyle York. He's the co-founder, CEO, and managing partner at york.ie, where he sets the company's vision of building a hybrid strategic advisory, investment, and operational growth firm. He works closely with entrepreneurs and investors to help them realize their shared ambition to build great communities, new jobs, grow general wealth, and impact the world. Investing in over 75 startups over the past decade, Kyle is also a co-founder and board member of a third-generation family business called York Athletics MFG, an e-commerce footwear brand based in Boston, and is also a board member of CAMS, Asset Compliance, Cloud App, and Forsivity. Kyle, you ready to take us to the top?
Absolutely.
All right. So how should people think about this? Is this a fund and York is a platform you just invest through, or what is York?
Yeah, so sure. So thanks for having me, Nathan. It's really exciting to be here and talk to you. Yeah, so I've had a long career operating SaaS businesses, SaaS startups. Claim to fame, helped build a company called Dine that we built to 100 million ARR and sold to Oracle back in 2016. And in parallel,
what was the price? Jeremy wouldn't tell me the price. I had him on my show, and I go, Jeremy, what was the price? The press says 500. I'm like, it's enough removed now. It's enough years in the past where you could just slip up and there'd be no lawsuit.
Well, no, I mean, I just say it's a rumored 600 million is what I like to say. And so, yeah, I mean, but we had a great success. Jeremy and the team we had around us, we all built just a really fun company. We did it in our hometown of Manchester, New Hampshire. And in parallel to that, I had been angel investing like many of the other Dine early executives and doing advising and boards. And by the time I ended up staying at Oracle, spent 3 years as the general manager of the business unit, ran cloud strategy for Oracle. And, I kept feeling like the traditional venture capital industry or the conventional sort of way of operating businesses were binary decisions. So I wonder if york.ie could enable me to invest, but also advise, consult, build our own SaaS platform, sort of build this kind of vertically integrated next generation company. So that's really what york.ie is. It's a SaaS business. It's a advising consulting business. And it's an investment business focused on early stage technology startups.
So let's talk about the SaaS component first. What is the customer paying you for on the SaaS side?
So we actually haven't even launched it publicly yet. The SaaS platform is called Fuel. We've publicly announced it because it's a market and competitive intelligence platform. So it's how we build our investments practice, how we do market tracking, proactive discovery, market theses. And it's also, we've today launched its SaaS subscription model. We've launched 3 services modules that are almost managed services on top of the SaaS platform: market product strategy, business growth strategy, and Marcom services. And so those services start at $3,000 a month and they scale up from there. And we basically productized and modularized these services using our technology capabilities so that they can be hyper scalable, really margin friendly. And then over time, the idea is that we'll then open up the SaaS platform to the market once we build up a bunch of captive demanding customers on top of the managed services practice in the investments business.
So what is the native services practice? You mentioned there's technology there, right?
Yeah, so the services practice, think of it like a private company database. Think of it, almost an operator version of like Traxon or PitchBook that are more based or built for venture funds or private equity funds. What we're trying to do is basically have the most accurate and connected data sets on companies and markets. And then we're building a capability called Smart Notebooks, which is really like smart automated templates for things like market research or strength or share of voice, collaboration or marketing competitive sizing and things like that, company pitch decks. So really like operator tools on top of the data sets to scale businesses and we think disrupt markets.
How many companies do you have listed in your private company database currently?
Currently, that's a great question. It's a lot of internet scraping. I think the current database is about 800,000. But last I checked, just this past Friday release, we're recording this on a Monday in mid-October. We added the capability to scrape another 3 million companies through our data sets.
Why so many? Why go so wide instead of deep on a specific sector?
Yeah, I think it's you need to get a broad enough cross section of startups in the sort of startup community. I mean, most of the companies, think of it like a private company Bloomberg portal. There's so many small companies. The ability for these companies to get bigger and bigger and bigger, it's just a long tail to the startup market, right? So to be able to cover all the disruptors, all the innovations, all the features, capabilities, you need to have a pretty long tail of the market. We think a lot of the big use case of the technology, I mean, a lot of it was built on the backs at Dime. People don't know this. We actually acquired 11 companies and we spun out 4 different technologies that we sold to other companies. And then at Oracle, my team, I had hundreds of people who worked for me, but we had a dedicated 35 strategic development team, which was basically marketing competitive intelligence. And it was a lot of manual automated research, market sizing, doing proactive market theses. Took a lot of human bodies to basically scrape the internet without technology. So to do this really well and keep an eye on the ankle biters and also the kind of heavily funded, fast growth pre-IPO startups, you just need automation and you need a widespread database.
Mm-hmm. But how, I mean, so I mean, you look at what Mattermark did, right? They tried this. They tried selling it to founders and investors, and then eventually sales teams, and it just failed miserably in the long run. And a lot of people, when you talk to ex-employees, they say the big mistake was Danielle gave essentially a thesis that we need to have 30 million companies indexed by X date. And a lot of people say the mistake that was made is the data was so wide, it wasn't differentiated. You could just go to PitchBook
right.
or Crunch. So you either have to have a differentiated data set and then go wide and have a data point per each company that other people don't currently have, or you say super focused and go really deep on a specific cohort. You're going wide. What data point are you going to have on all companies that they can't get elsewhere?
Yeah, so I think a lot of those companies you just mentioned, Mattermark, Crunchbase, PitchBook, they're relying on lots of point solutions and point data sets as partners and integrators, like an Owler or Built With, and a lot of these. I was an investor and shareholder and board member of DataNize. I was the founding investor who sold to Zoom Info. A lot of these companies are good little companies, but they're never going to be venture-backed big companies, right? So a lot of the capabilities that are being integrated into the Crunchbases and others from these point products, we're actually building ourselves and integrating in. The other reason why Mattermark wasn't a successful company is because they fundraised too much. The entire thesis of my investment firm is take less capital. I mean, the best part of the Dine story is that we didn't raise $1 of outside capital till we were 30 million ARR. Mm-hmm. I'm in the fortunate position to self-fund york.ie and self-fund our fuel platform. So I can actually control our destiny, control our fate, control our cap table, and not be beholden to investors' definition of success or failure. Mm-hmm. So I think it's those two things. I mean, it's building a lot of the IP ourselves. I think it's launching our services and investments practice on top of the platform ourselves so that we can hone the product, the capabilities, the automated levers of the platform. And then over time, decide what parts of it to offer to the market. I think what you'll see with us is we're building our smart notebooks is really more around automated workflows and doing a lot of education and training on how to do market research, how to do better amplification, how to curate better content. And I think those types of things that we build in as more workflows will also help us not just be a company data, a tool that you think flow of the user, of the operator, and that's not always the case.
Mm-hmm. So Kyle, the revenue model there again, SaaS, we know what SaaS is. It hasn't launched yet. Your strategy and services practice, which includes the database, it includes smart notebooks. That's $3,000 a month and higher.
Sorry, it's breaking up a little bit. I don't know if is that on your side too, or is it just mine?
I hear you clearly. So what I was saying was you've got 3 different product lines. We know what SaaS is. You talked about strategy and services, $3,000 a month. That includes your private company database and smart notebooks. Is that accurate?
Yeah.
And then your third product line is capital. You're investing, correct?
Exactly right.
So walk us through that.
And so there we focus on
how many investments have you made and what's the fund size?
Yeah, so we don't run a traditional venture fund. We operate an evergreen syndicate. So back in 2014, I co-founded the SaaS syndicate on AngelList, which remains the largest SaaS-specific syndicate on the platform. I co-founded that with Gil Penchina, who's a good friend of mine from the industry. And back when I was leaving Oracle, we took that over from Gil. And we thought at first we'd just invest our own capital and then leverage the AngelList syndicate. Pretty quickly, what we started to learn is that a lot of high net worth individuals and family offices were looking for an alternative in alternative investments from traditional kiss the ring venture funds. So what we basically created is a master series vehicle high net worth individuals and family offices invest alongside our capital. There's no traditional management fee and there's no traditional fund economics. We get a 5-year commitment from our investors to give an annual amount per year, and they get a percentage of every single deal we do every year. And then the economics to York.ie, we take a carried interest on a deal by deal basis, not on a fund wide basis. So we pass through no management fees, no deal fees, and we just make money on the economics on the deal by deal carried interest. So it's just a different model. It's a little bit more fluid. Our backers tend to be leveraging our infrastructure, sending us their deal flow, using us for reporting and tracking. They'll be some of the first outside beta customers of our Fuel platform. They're bringing a lot of their portfolio for consulting advisory to us, and it's great. And so we've done, since we launched, actually we just wired a deal today. We've done 17 investments. We've deployed right around $6.5 million. We average about a 500K check size now because it's evergreen. Our average check size is going up every year as we bring on more of a capital pool. And so we're up to about $6.5 million per year to deploy, all going into early stage B2B SaaS businesses. Because of our heritage, we have a lot of experience in infrastructure, DevOps, dev tools, cybersecurity, but we'll go all the way up the stack into vertical SaaS opportunities in tech laggard industries. And again, we lean in. We're involved. It has to be the right mutual pairing. A lot of VCs say they help and they have operational expertise, but we're truly investing. We've got a 15-person team, ex-operators, active operators. We're trying to really be an operational extension from a go-to-market.
So talk to me about OnFleet. I see them listed on the york.ie profile on AngelList. We just had Khaled on the show last week. He talked about they're about to break $10 million in revenue. Obviously, COVID has been impactful for them, considering its last mile delivery. They've exploded. How are you helping Khaled?
Yeah, so Khaled was actually, we've done multiple. So Khaled's I call it a legacy or investment. So it was part of our AngelList SaaS syndicate while I was still working at Dyn and Oracle. So we actually led one of his early seed rounds and then participated in a couple of different seed rounds through our AngelList syndicate. And then I was a personal angel investor with Khaled and the OnFlip team. We've actually been actively talking to them recently about our Marcom services module built on top of our Fuel platform. A lot of tech startups don't like the minimums of the Edelmans and the PR shops. They don't like the siloed nature of media relations and PR. And we call it drumbeat marketing. It's really more around content marketing meets thought leadership content meets media and analyst relations, and more of a flywheel approach in a high velocity, high urgency approach to content curation and getting your market points of view to the world. So we've been talking to him a lot. He's in our prospect pipeline. I'll send him this when you post it. Nudge, nudge, wink, wink, to bring him
Got
over.
it. Okay, so it sounds like, and so try and quantify this for me. So when did you officially launch York.ie? What year?
Yeah, so we launched York.ie last September, 2019. We left Oracle in the summer of last year after our near 3-year run there. But again, we brought 75 plus angel investments and boards and advisor work that we had been doing, me and my two partners, Joe and Adam, to bear. So we brought that kind of into the mix. So we had a sort of a captive starting point. But we started writing checks last September and really, really aggressively going. We didn't launch our advisory services practice till this past May. We hired Kate Campbell out of Pan Communications. What we learned about ourselves as operators is we knew how to operate and we had a lot of know-how, but managing accounts and making sure we had processes and we were more programmatic and we could actually account manage really well and do better reporting. We hired someone who came from the services spectrum. She's a VP for us who helps run that practice. And she started in May and we launched the services.
And so how many people are now paying for the services product?
Yeah, we have about 25 outside clients, average tickets paying around $7,000 a month for the services. So, we've got ourselves upwards of, with some of our other project work and things we've done, we've got ourselves right around $1.5 million ARR in the first year. And, we have pretty clear line of sight to continue to grow with this kind of managed services hybrid model. And we plan on launching our SaaS solution, self-serve e-commerce, team inside sales in the spring as well.
Yeah, I mean, the most successful SaaS companies always come out. I mean, from what I've seen, at least a glaring pattern is a successful agency spins out successful tech because they've got a built-in base. You guys brought a built-in base. You, Joe, and Adam with 75 deals you're bringing in. You're now selling consulting essentially or managed services. And then the SaaS product, higher margin, fuel. Hopefully you onboard those folks there and build a great SaaS business.
Yeah, and just it's more automation, right? It's more streamlined. And the way I like to picture it over time is that we'll put out all the content. York.ie, we're a top startup blog already in the last 12 months in the world. I think we're currently ranked like number 30 in the world for our content. We're putting out tons of education, tons of curriculum for SaaS businesses on growth. We'll then try to convert users to, give us their emails or sign up for Fuel, free, paid, team, etc. And then we'll layer on advisory and consulting, where right now we're getting to that first. And then the cream of crop SaaS businesses, early stage SaaS businesses will invest, right? So that's the vertically integrated strategy. And we launched with that vision. It was just faster for us to start investing and then faster for us to launch consulting modules. And it takes time to build IP and a moat and technology. And again, I think what's really cool about it is it really is vertically integrated internally, meaning a lot of the roadmap is for us to be our own first super user, both our investments business and kind of our advising consulting business, which is an operating extension of these teams. So once we eat our own dog food and we're addicted, then we'll start opening up to investment partners, angel portfolio, york.ie portfolio, direct access for consulting clients. And we'll have a minimally viable audience that, I think will, as part of the mix and part of the engagement with york.ie, we'll find a lot of value.
Kyle, on that note, we're out of time. Let's wrap up here with the famous 5. Number 1, what's your favorite business book?
I love Think and Grow Rich.
Number 2, is there a CEO you're following or studying?
I just follow everything Richard
Number 3, what's your favorite online tool for building your company besides your own?
Oh, that's so good. Maybe Cloud App. I love doing Cloud App videos and, trying to get my voice out there. Yeah.
A little bit cheating, but I just want to put that out there. Okay, good. And then how many hours of sleep do you get every night?
Oh, I sleep a lot.
I love that. And situation, married, single, kids?
Yeah, I'm married to my wife, Katie, who I met at Bentley University in college. And then I've got 3 kids, Henry, 8, Teddy, 5, and Evie, 3. So quarantine's been super.
I love that. And how old are you, Kyle? 38.
I'm 38. Actually, what am I? I'm 37. I turned 38. No, I turned 38 next month. But,
Fair. All right, 37 today. And then take us home here. What's something you wish you knew when you were 20?
Oh, man. I've always said it now in hindsight, but play the long game. I mean, you can get a lot further along if you play the long game and you set a big, big vision and then you work.
Guys, york.ie doing a $1.5 million run rate right now, about 25 customers paying $7,000 per month. Those customers are founders that are basically paying for a managed service, strategy and services that Joe, Adam, and Kyle founded after they left the hugely successful Dine. They brought 75 deals sort of in with them. They're now launching a SaaS product called Fuel to help these founders grow more effectively following automations and playbooks. And they're also, when they see a company they love, making investments. They've deployed checks into about 17 deals so far, average check size $500,000. They can now deploy about $6.5 million per year via their syndicate on AngelList. Kyle, thank you for taking us to the top.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com yourk.ie/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.